Hello, this is Bharatraj. Welcome to CVR English. Bank fraud is a use of potentially illegal means to obtain money, assets, or other property owned or held by a financial institution, or to obtain money from depositors by fraudulently posing as a bank or other financial institution. Demand draft fraud typically involves one or more corrupt bank employees. Firstly, such employees remove a free DD leaves or DD books from stock and write them like a regular DD. Since they are insiders, they know how to do the coding and punching of demand draft. Such fraudulent demand drafts are usually drawn payable at a distant city without debiting an account. The draft is cashed at the payable branch. The fraud is discovered only when the bank's head office does the branch-wise reconciliation, which normally take 6 months. By the time the money is gone. Remotely created check frauds are the orders of payment created by the payee and authorized by customer remotely, using a telephone or the internet by providing the required information including the MICR code from a valid check. They do not bear the signatures of the customers like ordinary checks. Instead, they bear a legendary statement authorized by drawer. This type of instrument is usually used by credit card companies, utility companies, or telemarketers. The lack of signatures then susceptible to fraud. The fraud is considered demand draft fraud in US. A bank soliciting public deposits may be uninsured or not licensed to operate at all. The objective is usually to solicit for deposits to this uninsured bank, although some may also sell stock representing ownership of the bank. Sometimes the names appear very official or very similar to those of legitimate banks. Essentially, a confidence trick. A fraudster uses a company at their disposal to gain the bank's confidence by posing as a genuine profitable customer. To give the illusion of being a desired customer, the company regularly and repeatedly uses the bank to get payment from one or more of its customers. These payments are always made as the customers in question are part of the fraud, actively paying any and all bills the bank attempts to collect. After the fraudster have gained the bank's trust, the company requests the bank begin paying the company upfront for bills it will collect from the customers later. Many banks will agree, but are not likely to go whole hog right away. So again, business continues as normal for the fraudulent company, its fraudulent customers, and unwitting banks. As the bank grows more comfortable with the arrangement, it will trust the company more and more and be willing to give it larger and larger sums of money upfront. Eventually, when the outstanding balance between the bank and the company is sufficiently large, the company and its customers disappear, taking the money the bank paid upfront and leaving no one to pay the bills issued by the bank. This takes a number of forms, ranging from merchants copying clients' credit card numbers for use in later illegal activities, or criminals using carbon copies from old mechanical card imprint machines to steal the info, to the use of tampered credit or debit card readers to the copy magnetic stripe from a payment card while a hidden camera captures the number on the face of the card. Some fraudsters have attached fraudulent card stripe readers to the publicly accessible ATMs to gain unauthorized access to the contents of the magnetic stripe, as well as hidden cameras to illegally record users' authorization codes. The data recorded by the cameras and fraudulent card stripe readers are subsequently used to produce duplicate cards that could then be used to make ATM withdrawals from the victim's account. One way to remove money from bank is to take out a loan, which bankers are more than willing to encourage if they have good reason to believe that the money will be repaid in full with interest. A fraudulent loan, however, is one in which the borrower is a business entity controlled by a dishonest bank officer or an accomplice. The borrower then declares bankruptcy or vanishes and the money is gone. The borrower may even be a non-existent entity and the loan merely an artifice to conceal a theft of a large sum of money from the bank. This can also be seen as a component within mortgage fraud. Phishing, also known as internet fraud, operates by selling forged email impersonating an online bank, auction, or payment site. The email directs the user to be a forged website which is designed to look like the login to a legitimate site, but which claims that the user must update personal info. The information thus stolen is then used in other frauds, such as theft of identity or online auction fraud. A number of malicious Trojan horse programs have also been used to snoop on internet users while online, capturing keystrokes, confidential data in order to send it to outside sites. Fake websites can trick you into downloading computer viruses that steal your personal information. Security messages are shown that tell you that you have viruses and you need to download the new software. By doing this, you are tricked into downloading an actual virus. Go through your bank statements regularly. Your password and PIN are meant to be secret. Make sure your online banking password is strong. Never give your bank details over the phone. Do not click on the unknown link.